Greetings, this is Jeff Scott, and welcome to this week's weekend market update. This is for the weekend of February 6th, 2022. I titled it, Will We Retest the January 24th Lows? Perhaps I should have had a second part was, and will they hold? My email address, as you can see, is htsidoc@gmail.com. Two quick housekeeping things. One, if you like this video and you want more, please hit subscribe. I don't get any contact information. I don't keep a mailing list. And when I do things during the week, like I did this week, that's the best way to get noticed. The second thing is you want to watch this in 4K or high def. You don't want to watch it in standard def. If it has not had a chance to process, you will see a very blurry vision because this is a 4K video. I also have a link to download below that might work better for you. Okay. Go on to the first slide. This is for educational purposes. Anything I might recommend should be considered in the spirit of education and not investment advice. I'm a doctor, not a broker. I pay for the tools that I use. Trading involves risk, and you are solely responsible for any investment decisions you make. And options should be considered risky. If I talk about them in the course of this event, I recommend that you visit the Options Industry Council for some excellent information and education. I like to start with the expected move chart because it really gives me a sense of what happened in the market this week. So those that don't know what this is, think of it as buying a straddle at the money, at least at the money of what the price was at the close of the prior week. And what that means is you'd be buying a call and buying a put at that strike price. That's going to be very expensive. You're buying it because you're concerned about the volatility in the market and you believe we're going to get an outsized move. And you might be protecting your portfolio through the use of this call spread. Now, since you're buying two calls, that means you're paying a double premium. And it turns out that the price that you're paying is going to be the distance between the expected move from the close to the high and the close to the low. So for you to make money, you have to end up outside the green and the red. If the market closes within the range, then one side of the option you'll lose 100%, and you might make money on the other option, but that depends where it closes. Since the smartest money is the option seller, they do this in their favor. When I've gone back over the last couple of years, it's about 83% of the time that the option maker actually won on that trade. So what you could see, and again, this is a funny week because there were some crazy moves in the market after hours, which will be captured perhaps here by the futures, which may look a little bit different than during the day. So for example, when we look at the futures, the E-minis stayed within the range the entire week, although it was a very big range. And if instead of the E-minis, I actually look at the spider, you'll see that the spider on Wednesday traded up, and then the spider, because of Facebook, tanked on Thursday, got back inside the expected move. And on Friday, there was an up day, but much less than we might have expected based upon what happened in the pre-market and post-market with the Amazon earnings. Whoops, hold on, let me fix that. I like to have things working the next time I come to my computer. Awesome. If I look at the NASDAQ futures, again, we're looking at the futures, not the cash market. And you can see Monday, Tuesday closed above the range. Wednesday, these futures were strong and reversed. Thursday, traded down to the middle, closed at the upper limit, and came down again on Friday, even with the Amazon move. Again, these are the futures. Usually the futures and the cash market are more aligned. I think there were some outsized moves because of earnings this week. The Dow ran up, came back in, closed within the range. The Russell came out of it like the NASDAQ and the SPY, but came right back in for the close. So on each of the four major indexes, the market makers were winners. If we look at the VIX stayed below the range on the big move of the market early in the week, but came back in the range, especially on Thursday with the Facebook debacle. And then the dollar was the weak thing, the only thing that traded outside the expected move of these major markets, and you could see the dollar sold off hard. Now, last week, I think I ended by saying I expected the dollar to go lower and that would be good for my portfolio based upon how the markets did. I hope it was good for your portfolio as well. Now, very quickly, let's look underneath at what's going on. The rates, we have the 10-year on the left, 30-year on the right, and you could see that the rates came up on both of them. And down here, you could see that rising rates are good for banks, especially the regional and insurers. If I look at AD lines, now the AD lines on both the mid and small cap S&P, the Russell 2000, and on the large cap 1000 are off their highs, but you can see that not only is the AD line, but also price on the 2000 are much more down, I know that's good English, than the larger caps. And if we look at the NYSE, you can see that most things picked up some this week. And the AD line is in white. The prices of the major market ETFs, as indicated up here, are the colors. And you can see down here that TLT bonds sold off with rates going up. Now, one would expect breadth to improve if the markets were up, but breadth really didn't change much. Small improvement in stocks above the 200-day and 40-day SMA. And here my T2121, the 12-week or 3-month new high, new low, moved up, but it's still in the lower part of the range, and there was just a nominal increase from last week. So even though the markets, as you see, index finished up on the week, there wasn't a major move up underneath the indexes. And I think I saw that as I looked at charts this weekend. The buckets, here's another sign that there's weakness beneath the indexes. This is taking the stocks in the S&P 1500 and looking at each one where they fall within their Bollinger Bands. This shows me that 29% are above the midline, 71% are below. That's bearish. Now, I don't see a lot of stocks below the bands or above the bands, so that minimizes a bit of what my thoughts on how the market's doing. And when I say minimize, when I get a large number less than 0 or greater than 1, I get a lot of, I think, an edge that something's going to happen. Here I see a weak market, most of the stocks congregating in the bottom third of their Bollinger Bands. Hindenburg omens are something I like to watch. Yes, it's an old wives' tale and not everybody believes it, but you can go back to World War II or before. You didn't see a major market correction without a signal from the Hindenburg omen. We saw them on both the NASDAQ in November and the Dow late November, NYC late November and December, and they certainly did predict what we saw was a pretty significant sell-off. What I'm paying attention to now is the rising new lows. Now, you'll notice there is not a Hindenburg signal on Friday in Edge Rater on the NYSE or the NASDAQ. This is a HGSI chart, and it's another program I've used. I really am fond of. I've been using it for a long time. It's an end-of-day program, although you can do snapshots during the day. And it has a lot of my favorite market timing indicators in here. Up at the top is the Hindenburg omen. It had one fire on Friday, pointed out by my old neighbor Kathy. She's always letting me know in the morning when we have a Hindi or a Eureka or a Phoenix. Now, I see it too. It's calculating the NYSE. I will wait and see whether it's still here tomorrow on the next update. Sometimes they disappear. Why would I see one on HGSI, not an Edge Rater? Because there's not 100% correlation. There's a little bit different in how the math is handled between the two programs. The weekly Bongo is red, so we're in a downtrend and we're looking at the S&P. If I look at the high jump, we're neutral, which means we're not extended to the upside or downside, so I don't see something that's likely to rebound. If I come down here, you see these gray bars, they're called the bingo. And the bingo is a baby out with the bathwater. And you can see when you get a number of those that you're likely to get a rebound, and we did. When we look down here, I got all excited on Monday with the big move. I think it was Monday. Whoops, we go back. It's not a chart. I can't do what I was doing. When we had a Eureka, and I actually did a video about that, which is sort of a follow-through day. But the market, although it bumped up for a couple of days, really is just still sitting on just above the 200-day moving average. And we had a Phoenix, which is probably more concerning on Friday. The Phoenix and the Eureka our exuberance signals, the green to the up, the red to the down. So I'm still a little bit nervous here on this market. If I look at the market tone, the Woody indicator, I do see a lot of green that gets me excited, but I've learned when I see the yellow and brown here, it just tells you how volatile this market is, like you wouldn't already know that. Sector strength, pretty strong, but again, a lot of volatility. Know your news and earnings. I don't think that we can ignore what goes on outside of our stocks. So when we look this week, what really popped up to me was we got two Fed people speaking on Wednesday. Will they try and talk us off the brink? Bank of America said 7 rate increases. I think the odds now are saying 5.7 increases the rest of the year. Will one of them shock us with a 50 basis points, and what will that do to the market? On Thursday, we see some jobless claims, but more important, we get the January CPI, both month to month, year to year, and regular and core. We have another Fed speaker Thursday night, so after market hours. And then Friday, we got some sentiment from the University of Michigan. That's for a week without a Fed meeting and without a monthly employment report, that's a pretty noisy week on news. And oh yeah, we got a lot of earnings this week, as you can see here. As I commented, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, each of the indexes rose more than 1% this week. The market continues to stabilize from oversold conditions despite increased rate hike expectations. You can see the individual markets there. They seem to have survived FANG earnings. Facebook defriended the markets while Google and Amazon caused them to rocket higher on their reports. And semis got some good news with AMD, but it really failed to hold much of its post-earnings exuberance. The markets managed to navigate the news, and they seem to like the outperformance on the monthly employment reports. Makes me think that the market is now accepting the fact we're going to get these rate increases, and now the market wants to see a strong economy and not stagflation. I still think we need to be careful here. Rising rates and inflation will continue to benefit commodities, banks, insurance. Energy will be benefited as well. I've raised cash. I'm hyper focused on the industries or these groups that I just mentioned before. I'll continue to look for favorable setups, but I'm cautious here, and I'll remain cautious for the near term. I do expect a retest of the January 24th lows, and I have to be prepared for what happens if that retest fails. All right, so for those that have been here the last couple of weeks, I'm trying to do a much shorter report, limiting it to 30 minutes. That's 13, so let's take a look at in wealth charts. If I go to the indexes, the first thing you'll see is I've painted down here on the indexes the January 24 reversal low on all of them. You can see that we bounced off the reversal low, ran up to resistance as might have been expected, maybe expect a little bit more, and we pulled back to the 200. That's very orderly and what I'd expect the spider to do. But I now know that I'm going to be stuck behind this trend line until I can break it. And will the 200-day hold, which would be great, or am I going to come down and retest? I also can see here that just the weekly bongo is red. So on a long-term monthly, the S&P is still up. The Qs bounced off its lows, failed at the 200. As far as I'm concerned, it's trapped between those. And you can see the monthly has gone negative, although short-term we're up off the lows. The diamonds failed at this trend line, although it's just below it here, so only time will tell. And it came up nicely off of its January 24 lows. The IWM, sort of the one that's beat up the most, and it too is trapped here between the lower edge of the preceding Darvish box and the January 24th lows. Not much going on with the VIX here, although it is not as low as it's been. It's sort of in a neutral zone. And as I mentioned, the dollar had sold off. Now, my guppy charts just show me I'm in no man's land. If I look on the dailies, We'll see, make sure I'm looking at daily on everything, daily and daily. We are in the moving averages. Now, good news. We bounced off the bottom of the moving averages and are back in the moving averages. That's good. The early motion, early movement signal is fired. That's good, although we haven't gotten the wealth signal, buy signal. We still have a long ways to go. We've not rotated the order of the moving averages. So I would say this is an area of concern, but maybe there's room for a little bit of optimism. And again, the laggard being the IWM. I like looking at my market theme, and what's been working has been large stocks, and you could see on the daily, IWB is large is favoring small. And if I look at the hourly, you could see this week there was a period of time where even on Friday, you started to see a reversal there. Look at the reversal earlier in the week. So the big move in the market this week, that Tuesday and Wednesday, Monday, Tuesday, Wednesday reversal up, you had a reversion with the smaller stocks leading. But when we look at a longer time frame, large stocks are still doing well. And if we look at growth versus value on the hourly, you could see that growth really started to do better this week, Wednesday and Thursday especially, and then earlier in the week as well. And this is something that would be nice to see, because on this market swoon we've been in, it's been heading down, which means that growth has been underperforming value. There are some key market ratios I like to look at to get a sense of the markets. And I like looking at spider versus gold. And this is ratio charts, and we can see the spider has come up, which is good, but it's still all has broken down below this moving average. And the spider versus bonds has improved a lot this week. So this was a stronger week in the market. Again, each of the major indexes were up more than 1%, and I'm not surprised to see the spider improving versus both of these. If I look over here, spider versus FANG, spider is outperforming. We're in the upper half of the channel here of the chart. If I look at spider versus 50, clearly the spider is doing better than the IBD 50, just like large is better than small. And what's really doing poorly, if you look at the Cathie Wood ARC ETF, underperforming versus the Qs. When I look at the sectors, if I just drop into hourly on the sectors, just to get a sense of what is working, and I'm normalized them by doing them all on racial charts versus the SPY. Materials and communications are not working. Energy is good, financials are good, staples are okay, utilities are up off the mat, but it's really what's leading the market is energy, energy, energy. Financials and staples seem to be waking up. That's kind of a defensive posture. Now I'm going to move into charts and scans. I'm going to go into Wealth Scanner. And the first thing I'm going to do is I'm going to open up my weekend review. I don't want the weekend review, my bad. I want my top-down indexes, which are a series of ETFs, indexes, sectors, industry groups, and it's going to show me where the strength is. This is a bullish chart, and no surprise, energy, commodities, gasoline, exploration and production, oil, financials and insurance, dividend stocks, and then we get down to some of the miners, and perhaps not the precious metal miners, and gas. If I want to know what's not working, I can go bearish here, and the high yield, biotech has been weak, junk, then a bunch of the ARCs, Israel, innovation, fintech, autonomous, the IBD 50, more biotech, and bonds. So that gives me a sense of where strength is versus weakness. Now, I think as long as we're above those January 24 lows, I'm going to continue to look at opportunities to the long side, but I'm going to be very careful at those opportunities because, frankly, we do have resistance above and we have risk below. So for me, I'm going to only take perfect setups. And as we know, there's not a lot of perfection, especially in this market. Another way of looking, I might just want to throw my S&P sectors in, and somewhere here they are, the SPY sectors, and it will show me what's not working are communications, industrial, discretionary, and what's working, no surprise, because we looked at the ratio charts, energy, financial, staples, utilities, and healthcare moving up. What are these? These are defensive. When defensive is working, what does that tell you about the market? If I jump down into sector scanner, well, let me just stay in well scanner for a second. I could go and look at, let's just look at the Russell 3000. And one thing I might do if I don't really want to spend a lot of time is I might pull up the Russell 3000 and look at what has the best bullish scores on the with their wealth scores, and I could look at stocks. Now, a lot of the stocks that have the best scores have had big runs, and just kill something here. And after big runs, they might be extended, but it's not a bad way to play and to actually look for things that you could buy on a bounce, so, or a pullback. So these are some of the best performing, and you can see there's a whole lot of energy up near the top. But let's go into sector scanner. And sector scanner, typically I look at daily algo and I find the highest and I pick those industry groups. So if I do that, I'm going to end up picking energy, financials, and those are the only ones above 100 on the algo score. They're also the leaders on the weekly as well. Now, I'm going to now look at daily percent change, and I'm going to add technology and healthcare here because they were the leaders on Friday. They have been laggards over the length period of time, and you can see on a month they're down 8 and 11% respectively. So I'm going to look as a top-down investor in those four sectors. I'm going to hit compare. It's going to open up a bunch of industry groups. If I look at the daily algo scores, let's pick the top 10. One of the industry groups, too. I'm just checking off in order of algo score, 7, 8, 9, 10. And then why don't we now look at percent change and make sure we get some of the big movers: solar, another energy, exchanges, computer hardware. All right, we'll take those. All right, now what I can do is compare again, and I'll get the stocks that are within those sectors. And let's do this a couple of ways. Let's look at the top stocks. So we'll check this one off. I'm going to hit my shift key, and I'm going to go down and say 730 this time. There's not nearly as many on the list. I'm going to click that, they all in, and I'm going to add it to the watch list. Let's make sure that my default watch list is weekend review, which it is. And I'm going to hit add to watch list, and up in the upper right hand corner, you can see success that's being added to that watch list. I've added a few other things to it already today. Now I might also go to daily percent change, and I got to believe that if you're the leader on daily percent change, you probably are getting extended. But let's just take the first top bunch of these as well and throw that into our list. All right, add to watch list. So now there's a number of manipulations that I could do to get a sense of what's working and what's not working. I can go back to Wealth Scanner, and now I can pull out my weekend review. And the stocks that we put in that list, which will be a more limited, perhaps, come to the top. And you can see Vermilion Energy was the leader here. And we could look at each of these charts. And again, if a stock has an algo score of 880 or wealth score, there's a pretty good chance it's already extended, and you might look to buy it on a pullback. And you could go through looking at the various ones. PBF is a refiner. This one I thought looked interesting. But again, most of these stocks have had significant runs up. But these are the leaders, and I'm looking at this during the day constantly, looking for new opportunities. Now, what I like to do during the day is I like to take that list, and I'll keep with the weekend review list, although it's a little bit bigger than I'm usually to use, and I'll drop it into, well, I'll just use these that I have here. I'll drop lists that are meaningful to me, and I can watch during the day what's actually going on with my different stocks and get a sense if it's something that I want to be buying or selling. And I probably don't look much at the minutes, but I look a lot at the hour to monthly. And when I start seeing things showing up here, I know there's some strength that I might want to look at. I'm a mostly end of day trader, so I like to take my list and drop it into some scans. So the CAT scanner, it's coming, promise. Um, it is working very well. Um, and let me just show you how I use it and see if I can't find something that might look interesting. So I'm going to clear everything. And so here's all the stocks in that weekend review list in alphabetical order. Okay. Now, I could do certain things. I know that the Bongo Weekly for me is a good signal of a stock that's in a longer term uptrend. So let's just look at a bullish Bongo Weekly. So now I've got a bunch of stocks that are in a Bongo Weekly or an uptrend. All right. Now I can look at certain things. I might want to look at my dots. So the dots are momentum signals. And if I look at Egan, it's got 4 momentum signals. And if I look over here at the chart, what do you see? 4 momentum signals. So a big gap up, a big volume, a breakout, and a momentum, all occurring coming out of a squeeze. Well, that's awesome. Now I have to ask myself, is it too far gone for me to want to buy it? And I'm going to let you make your own decision there. This is more about finding them. I can see the high here is 21.45, and we're still about half of that. So maybe it is something I might want to be interested in. Let me make sure I've got one of my signals done correctly on this chart. On the EMS, I want to make it triangles so it can look different than the wealth signal, triangles down. And you'll notice that a couple days ago, I had my early movement signal fire. So I got the 17 above the 15. I've got a bunch of momentum. I might actually put that on my action list. And I'm concerned a little bit that it's extended. But when I look backwards and I see where it is on the weekly, I might be able to deal with that. So that might be one I want to take a look. Calm. This is, they produce eggs. Okay, I got to dismiss that. I'm sorry. Now I'm going to hit calm. Calm, from a chart perspective, pull back. Looks like it's breaking up. It had 3 of my dots. It had volume, breakout, momentum, PSR reversal. And you could see relative strength looks good. And it had my wealth signal the day before, or not my wealth signal, my early movement signal. So I'm finding things right away that look interesting. Now, one way I found to eliminate some of these stocks that are too far extended is let's look for stocks in the squeeze. And so what I'm going to do now, go back into my filter, and now I'm going to filter it for a squeeze. Type it. I'm going to apply. Now my list has gotten pretty small. So these are stocks that I don't think are going to be extended. So here's Neighbors. It's gone sideways on the weekly. It's got a nice uptrend here. Here's when my early signal fired. Coming out of a squeeze with 3 dots, strong relative strength, not extended by the high-low jump. Looks good on the weekly. So I found another one that might be interesting. And I could go through this list. Again, I'm looking for stocks in a squeeze that are getting some of my indicators firing. And these are all, if you're bullish and the stock's in an uptrend or moving up, these are great things. So you got volume, breakout, momentum coming out of a squeeze. This is Ring Energy. It's a cheapy stock, and you have to be, it's up to you whether you buy stocks that are that cheap. Rig, believe it or not, used to be a $200 stock, and it kind of looks like it's breaking out as well, 3 dots coming out of a squeeze. Now I can make this even better if I go back to my filter And now let's add in the bullish EMS. And so if I really wanted to take my life easy and not do any work, I might just focus on these stocks. Let's look at REI. I like this one already. And why? It's pulled back. It's off its highs. We already looked at it. Ring energy at cheap energy. You got my momentum signal, 3 dots coming out of a squeeze, relative strength turning up. That one looks interesting. AE is atoms, resource, and energy. Got my early movement signal, a squeeze, and 2 dots. I like that. Carter Bank shares. Here's a regional bank. Again, you've got the 17 above the 50, above the 200, a squeeze. You've got a breakout occurring here. I'd like to see it clear the 17. That one looks interesting as well. Cerner is a buyout, so I don't really care about, well, I care. And I like Lakeland Financial look good as well. So notice, by combining the squeeze, I'm getting stocks that are close to a base or basing. By adding the EMS, I'm finding a new breakout. And then I can look down here and look at my under indicators, such as the dots, the squeeze, the PSAR reversal, and then more things that I can teach as we go on. So that is my take. What did you see here? You saw energy, and a little bit of healthcare. I mean, this is a market that is not without its challenges. Now, there's a number of ways to look at seasonality in wealth charts. It's another thing that I'll be doing. I can take that weekend review list or any list, and I can just ask, are there any stocks that have really good performance in the next 2 weeks? And there are. And here are some of those stocks. And here's that Egan stock again that I said, it had a really big move and maybe too much. So let's just go back and look at that. Look at it in here, EGAN. Big gap up. But here's Egan, again, the 4 dots coming out of a squeeze. Look at strength going up. Yes, it's getting extended now, and that would be a consideration. It's getting close. Well, this was one high, but we talked about before, it's gotten up in the 20s. But let's go back to seasonality, and it tells me that its 2-week seasonality is up 13.96%. Well, that's kind of interesting, isn't it? I think it is. So I might look at Egan. I use this to identify additional stocks that I might be interested in, and I'm looking at 10 years of data. So on that note, this is close to 30 minutes as I've been. I think it's a market where caution is still the theme. Am I nibbling and buying things? Absolutely. But if you look at my portfolio, you'll see energy, you'll see ore, you'll see banks, and you'll see some protection. And I think that I don't see a whole lot on my review this week that changes that approach. Have a great week. Again, this is purely education. And yes, I use a lot of platforms, but I've been doing this a long time. For those wondering when my tools on wealth charts will be available, I hope to talk to Rob earlier this week. I know Rob had a great 2-day session. Thursday and Friday was busy this week. He had informed me earlier in the week that there are a couple things they're going to do to help me on my tools from how quickly they'll get done, looking at whether we need another server or not. So probably some more information to come from there. And on that note, and you'll know as soon as I know, because I'll let you know in a midweek update when they're available. And when I release them, I will do some educational sessions, and I will share my layouts and my different watch lists. And yes, this is a marketplace set that I'm talking about when it comes, and there will be a one-time fee. Bye, everybody. Have a great week. Be careful. We're not out of the woods yet, in my opinion.